Hello everyone, welcome to Crypto Trade Information channel. And today we'll be talking about candlesticks pattern. We'll be talking about different candlestick patterns and what they represent in the chart. First of all, let's have a recap of candlestick. We already know that the red candle signifies bearish, while the green candle signifies bullish. And in some cases, we might have an intersection of black and white candlesticks in a chart. So the black represents red, which is what? Bearish, while the green represents white, which is bullish. We already know what the body of a candle is, where the candle opens and where it closes. It makes up the what? The body. And when it opens from the higher level and closes on the lower level, that will have a bearish candle. But if it opens lower and closes higher, so there was an increase in price before the candle closes, we'll say the candle is what? Bullish. So the region within the time frame that they priced, that was touched on the highest level of price, and the region between the lowest level of price is what we call the what? The shadow. We have the upper shadow, the highs, and the lower shadow, the lows. And this shadow can also be called the wick, the candle wick. So now we know about the highs and low of a candle. The open and close making up the body. The highs and low make up the wick. So this is the basic things we need to know about what? Candlestick. Moving further, let's start talking about some candlesticks, types of candlestick we have. We have the bullish and bearish Marubozu candle. The bullish Marubozu green strong bar has no wick, as it only has the what? The body, as you can see in the diagram here. This is the bullish Marubozu, fully what? Just the body, no wick. So this simply implies that the candle opened at a particular price level, went right up, and it didn't go anything lower than the particular price level before closing. So that's forming a body without what? A wick. So same goes for the what? The bearish Marubozu. The candle opened at this very level. It didn't go higher than that. It went right down till it closes, forming a very, very strong bullish dominance. That's the Marubozu full. So this is what basic thing you need to know about the Marubozu candlestick. Full body, no wick, most importantly. But somehow we might have it partly in the sense that there might be wick in a part and Marubozu in the other part. So this particular Marubozu is just the open. The Marubozu is just at the opening of the candle. We already know that the bullish candle is opening lower and closing higher. Now at the opening of this candle, lower means it's bullish, and there was no further down movement. It went right up from the open till it closes. But before the closing, it got to a particular price level and went a bit down before closing, then giving us a wick. So the closing gave us a wick. So the Marubozu was just at the open alone. The same thing applies to the close. Marubozu was at the close and it went right down to what? Opening of the candle for the bearish, it went right down before closing. Before the candle closes, it got to a particular price level. It came up a bit before what? Closing, giving a wick at the close. So the Marubozu bearish was only at the what? Opening of the bearish candle. Now just a reverse or an inverse of what we explained in the open, that is what we have in the close. The Marubozu was only at the close of this bearish candle. At the opening of this bearish candle, the price went a bit down. The sellers pushed it down and the buyers pushed it right up till it went right up to this price level and the candle closes. So the Marubozu was at the closing. And same goes with what? The bearish closing Marubozu. It opened at this level, tanked up, tanked a bit down, went right down and closes. So the Marubozu was what? As the closing. Now this is all we need to know about Marubozu candle. It signifies dominance. On the bullish, the buyers were fully in control. On the bearish, the buyers were fully in control. Sellers per se, we are fully in control in the bearish. So this is Marubozu candle, candle of dominance. Now let's talk about the hammer candle. Here we have the hammer, also known as bullish pin candle. You can see the diagram we have here. It looks like a pin. And this bullish candlestick has a considerable long wick, lower wick, apparently. Long lower wick, as you can see. Now, in most cases, we might have a little wick on the higher part. Little or no. Note that sometimes we might have a little wick at the high of the candle, or most times we don't have a wick at all, as you can see in the diagram. This candle tells us that the bears were initially in control in the time frame. See the time frame of this candle from the high and low is the time frame. So before the buyers took back in control, the long lower wick shows rejection of sellers' price in the market. The seller sold. There was a massive sellout in this time frame of the candle that got a price of at this level, but the buyers rejected the price by buying in and pushing the candle right up to this level. So you can see it opened at a particular level, which is this level. The sellers pushed it down to this level, all the way down, but the buyers pushed the candle right back till it closes higher. And the same goes for the what? The red candle, which somehow signifies bullish, but in hammer candle, there's nothing like bullish. Bearish. The red signifies bearish, but hammer, regardless of the red, it signifies that the candle opened at this level and closed lower. But on the time frame of the candle, we will see that there was a massive push from below where the buyers took it, sellers took it down, and the buyers pushed it right to this level. So this tells us that this particular candle, regardless of being red, is still a bullish candle. Sometimes hammer can be red or green. The color determine the open and close. But the time frame of the candle shows whether it's bullish or what bearish. So hammer on its own is what? A bearish, a bullish candle. Sorry, it's a bullish candle. So there's something we need to understand, because just like hammer, there's a candle that is called hanging man. We'll meet it along the way in our lecture here. They looks almost the same, but what differentiates hammer from hanging man? Hammer is actually a bullish candle, regardless being red or green, and is found at the end of a bearish trend. Is a signal for a bull reversal. But hammer looking exactly like hanging man looking exactly like hammer is found at the what? End of a bullish trend. It signifies bearish reversal. I will show some chart illustrations to actually explain that further as we move on the lecture. This is inverted hammer, more like an upside down hammer. It is another what? Bullish candlestick. Wherein the upper wick is considerably longer. Just the lower wick in hammer is what? Longer. Now, inverse hammer, the upper wick is longer, as you can see, just like an inversion of what? Hammer, just turning it upside down. In this case, the buyers were completely in control before the sellers launched a fight back. However, the buyers managed to hold out and ended up on the top. Okay, now another thing that we have to understand, like what I was explaining while I was talking about hammer, and I pointed out a particular candlestick that will still meet, which is the hanging man. Hammer is a bullish candle, regardless being red or what? Green. Inverted hammer is also what? A bullish candle, regardless being what? Red or green. And both inverted hammer and hammer are found what? At the end. Look at this chart pattern. At the end of what? A bearish trend. This is a bearish trend. You can see it is a downtrend, bearish. At the end of what? A bearish trend, will find a candlestick like this. This is a bullish signal. That's why it's called a what? A bullish candle. Is a bullish. There is a potential reversal. Look at another what? Inverted hammer. See where it was found at the downtrend. At this downtrend now shows that there is a sign of what? Bullish reversal. So both hammer and inverted hammer are bullish candles, and they are found at the downtrend of a bearish trend, and it shows that it's a bullish candle because there is a potential what reversal of that what chart trend. Now the shooting star. Shooting star is a bearish version of what hammer candlestick, particularly what inverted hammer to be precise. The shooting star looks similar to what the inverted hammer. As you can see, let's go back to inverted hammer. Look at this hammer. Inverted hammer candlestick. Are you seeing the candlestick? Look at it properly. Now look at this shooting star. As you can see similarities. Now, shooting star is found at the apex of a what? A bullish trend, or at the apex of an uptrend. You can see there's an uptrend here. And this is a signal of what? Reversal to what? Downtrend. As this shooting star flashed in the what? Charts, you can see it follows what? A downtrend. So it's actually a bearish candle. So more like a similar candle to inverted hammer seen at the uptrend is what? Shooting star. This same hammer seen on a downtrend is what? Inverted hammer. Inverted hammer is bullish. Shooting star is what? Bearish. They might look similar, but their position in the chart tells us what they are. Basically, the buyers were initially in the driver's seat before the sellers took back control. The upper week shows rejection of buyers' prices in the market. So the upper week here showing that the price of the buyers were rejected by what? The sellers. So shooting star is actually what? A bearish candle. Similar as in picture as inverted hammer, but the inverted hammer is what? A bullish candle. That's just their differences. Hanging man, like I said, looks like hammer. Hanging man candlestick. You can see the candlestick pattern. It looks like what? Hammer. You see the long shadow or wick. You can see the short wick. There might be no wick at all, just like hammer. But how will I know that this is a hanging man, not a hammer? Where was it found in the what? In the chart. Look at it. At the what? Apex of the uptrend. And it's the beginning of a reversal, potentially to the what? Downtrend. So when you see this hanging man, a candlestick like this at the uptrend, know there is what? A signal that there is a potential what? Overturn to the what? Downtrend. Now it's telling you to go short, but there's other criteria that you have to judge before you decide to what? Trade on it. This will be the opposite of inverted hammer. The bottom wick is much longer, and it often happens towards the end of an uptrend. In this case, the bears were initially in control and pushed the what? Price down. In the end, buyers tried come back but fell short, as you can see. So it's just what? Opposite of what? Inverted what? Hammer, as you can see. And it's also what? A bullish what? Sorry, is a bearish what? Candle. Hanging man is a bearish candle. Let's have a quick recap before we go further. Based on these candlesticks that have similarities. Now the hammer, as you can see, is what? Bullish, and is found what? At the downtrend of what? A chart pattern, and that downtrend is signaling what? There will be a bull reversal. So that's why it's bullish. Inverted hammer, a hammer turned upside down, is also what? Bullish, and it's also found what? At the downtrend. At the downtrend, signaling what? Reversal to the what? Upside. Is also what? A bullish candle. Now shooting star is what? A bearish candle. Similarly to what? Inverted hammer in diagram, but is found what? At the uptrend, signaling what? A bear reversal. See, we'll find the shooting star here, and the chart went down. We'll find it again. It went further down to down and down. Now look at it here. We'll find it at the apex of the uptrend. What do we see next? The movement of the chart went what? Lower. So shooting star is actually what? A bearish candle found at the what? Uptrend, and it signals what? downtrend movement. Hanging man, similarly in picture like what? Hammer, but is found at the what? Apex of the what? Uptrend, signaling a potential reversal to the downside. As you can see, at the end of what? A bull or an uptrend, the candle came in, moving the whole chart pattern to the what? Downtrend. That is what? Hanging man. So now moving further, there's a candlestick here, spinning top and spinning bottom. Spinning candle, when it's what? Bearish, is called a spinning top. When it's bullish, it's called a spinning bottom. When this spinning candle, look at it, it has a, a short body or a small body with long wicks. Both the upside and downside has a long wick where the body is in between. A small body. When it's found on the what? Uptrend, is called the what? Spinning top, and is signaling what? A bearish movement in the chart. And when it's found on the downtrend, it's called the what? Spinning bottom, and is signaling what? A bullish reversal in the chart. This pattern can be formed at the top of an uptrend, the bottom of an uptrend, or in the middle of a trend as well. It can be a bearish or bullish candle, bearish for the top, bullish for the bottom. In this candle, the price open and close are nearly each other. The price open and close are near to each other. There was a grammatical error in this text here. So the price open and close are near to each other and have a medium sized wick on both ends of the body. You can see it as the diagram represents. This pattern forms when there is indecision from the bulls and bears during the uptrend, downtrend, or sideways trend. This candle provides sign of possible change in trend depending on the climax and market sentiment. So considering other factors of the market, it signals what? Change in trend. When it's found on the up, there is change in trend to the downside. When it's found on the down, there is change in trend to the upside. So that's why a spinning top is likely a bearish signal. Spinning bottom is likely a bullish what? Signal. When it's in the middle of a trade, there is still indecisive. It's more like an indecision candle where the buyers and sellers are pushing the candle to almost nearly opening and closing at nearly almost the same point. So this is basically what we need to know about spinning top and what? Spinning bottom. The doji. A doji candlestick happens when the price opens and closes nearly the same spot, almost equal. As you can see in the diagram, this is a neutral doji. This is a long-legged doji, basically long-legged. There was movement on the very high side, very low side, and it came in the middle and closes exactly at the same place it opened. The candle closed and opened at exactly the same place or nearly the same place. So you can note the difference between doji and what? Spinning candle. There is actually what? A shadow, which is the body. Significant shadow, though it is very, 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 very small. But doji is very, very insignificant because the price opened and closed at nearly the same spot. So that makes what? A doji candle, and it's actually a full-blown indecisive what? Candle. Gravestone doji. As you can see in the diagram, gravestone, it looks like what? A gravestone pattern. As you can see, this pattern is a doji with long upper wick. As you can see, the candle opened here, went right up, the buyers pushed it right up, the sellers pushed it right at the same spot that it opened, and it closed at that same spot. So this actually has a long wick. This means that the buyers were initially in control before the sellers rolled back and cancelled out all the gains. The gravestone doji is a sign of an upcoming bearish movement. It's an upcoming bearish. It's actually a signal of downtrend coming. Dragonfly. This pattern is a doji with a longer lower wick and is the opposite of what? Gravestone doji, as we can actually see in the image represented. In this case, the sellers were initially in control before the buyers stepped in and cancelled out all the losses. This doji is a sign of an upcoming bullish what? Movement. Logically, the candlestick, it opened here The sellers pushed it down to this point. The buyers pushed it right back at this point before it closed. So it's a sign of what? A bullish what? Reversal in the chart trend. So as you can see, doji, depending on the type of doji, determine whether it's a bullish what or bearish. But doji on its own is actually indecisive candle. When it's neutral or long legged, it's actually an indecision candle. You are not to take any decision. You have to wait for the next candlestick to know the market trend. Now, gravestone is showing us what? Bearish reversal. Dragonfly is showing us what? Bullish what? Reversal. Maybe with other chart structure, you can able know whether to trade this very tan candlestick. With other decision you have to make, volume support and every other thing you need to know before you can be able to trade this what? Candlestick. You don't trade in isolation. So a quick recap, you can see the difference between spinning candle and what? Doji candle. So spinning has a significant body, doji has insignificant body. Up next, we'll be talking about combination of candlesticks. These are the highlights. Bullish engulfing, bearish engulfing, morning and evening star. These are combination of what? Candlesticks. In this section of what? Candlesticks pattern, we'll be combining two or more candlesticks to form a particular what? Pattern for explanation. Like bullish engulfing has two what? Candlesticks making up the candlestick pattern. Bearish engulfing, the same thing. Morning, evening star, these are candles that there's a combination of three different candles before you call it a morning or evening what? Star. So our next tutorial will be on what? Combination of candlesticks. So subscribe to our channel, turn on notification, like the video, and wait for subsequent videos that will be coming concerning this combination of candlesticks. Thank you everybody. Thank you for your time. Thank you for watching our video from Crypto Trade Information.